Couple of growth and income stocks now on the radar of our growth and income stock strategist, Todd Bunton. He's here to tell us more about them. Wells Fargo, WFC, is one. Yeah. They report earnings?
They did on Friday, April 11th. A very recognizable name. I like to say one of the best-run, too-big-to-fail banks. And the company delivered another solid quarter. It actually marked their 9th consecutive positive earnings surprise based on Zacks consensus estimates, and that's despite a pretty difficult operating environment. So, interest rates have risen, so people aren't refinancing anymore, and that was a significant part of their income.
Yeah, matter of fact, a few days ago came out and said loan originations were way down for them.
Yeah, and that's been tough too. Sure, that the housing market cooled off with the weather over the winter, but they were able to make it up in other areas. So yeah, mortgage banking income was down, but credit quality did improve, so they took a lower provision for loan losses. That helps their bottom line, and that was justified. People like to say, oh, banks are just trying to manufacture earnings. It might be true a little bit, but at least they can have some numbers to back it up, because if you look at the number of non-performing loans to their total loan portfolio, that's declining. So people are paying their mortgages on time more, and that's good for Wells Fargo, obviously. And then on the expense side, they're very efficient with what's called the efficiency ratio, which is non-interest expenses divided by total income, and that continues to improve. They're one of the best big banks in that area too. So so very well run despite the difficult operating environment. Led to, like I said, its 9th consecutive positive earnings surprise. And if you look, earnings estimates have been rising since that beat, and really over the last several months. You can see nice steady upward trend in consensus estimates for both 2014 and 2015. Sent it to a Zacks rank of 2, which is a buy rating. Now, based on consensus estimates, analysts expect about 4% earnings per share growth this year and 6% growth next year. Nice mid-single-digit earnings growth. Again, like I said, the difficult operating environment, it's tough, for them to continue delivering those double-digit earnings increases. But, pretty steady operator nonetheless, as you can see over the last several years. And if you tack on the 2.5% dividend yield, it looks even better. And they're actually one of the best capitalized banks too. So, they have approval to raise their dividend, and they're probably the best capitalized too-big-to-fail bank.
Well, second largest, right?
I believe so. Yeah, they're definitely the largest mortgage company now in the company, or in the country, I should say. But in terms of their dividend, they did cut it in 2009 during the Great Recession, like a lot of banks. But they've been aggressively increasing it since 2011, and I'd expect continued dividend increases over the next several years too. And on top of that, they trade at a very reasonable price, just 12 times forward earnings and 1.6 times book value. It's a little bit of value to go along with the good growth and income metrics. Could be solid total return potential here throughout 2014.
All right, and this other company is in the category of paint. Yeah. RPM International.
Yeah, they're a holding company. They have a lot of different brands in their portfolio, but yeah, they focus on specialty chemical products for industrial and consumer markets.
Yeah.
Things like high-quality specialty paints, protective coatings, roofing systems, adhesive and sealants. Most of their revenue comes from the industrial side, but they do have a consumer side. People probably know their Rust-Oleum brand. They also have DAP, which people might recognize, Zinsser, and Varathane, which is a line of stains. So they were founded in 1947, been around a long time, and they benefit, at least their results are tied heavily to a recovering housing market and remodeling activity.
The do-it-yourself market.
Yeah, that too. Yeah, exactly. So as housing continues to slowly improve, this company should do well, and we've seen that in their results. They delivered 5 straight positive earnings surprises. Their last beat was on April 3rd. They're able to turn a low single-digit net sales growth into very strong double-digit earnings growth as their profit margins continue to expand. And if you take a look, analysts have revised their estimates significantly higher over the last several months too. It's currently a Zacks rank of 2. And good growth rates projected for this company. Based on consensus estimates, we're looking at about 18% earnings growth this year and 11% growth next year. So good, solid double-digit growth rates I like to see. And they pay a dividend that yields 2.3%.
Yeah.
And surprisingly, this company has actually increased its dividend for 40 consecutive years, which
Wow.
is absolutely phenomenal, especially for a company that their results are kind of cyclical. You wouldn't expect that. You'd think this would be a company to slash their dividend during a recession. Not the case. And they didn't even hold it steady. They continued to increase it.
Yeah.
And over the last 10 years, if you look, they've increase their dividend at about a 6% compound annual growth rate. So it's not just those nominal, 1 cent earnings or dividend increases that some companies do just to say, hey,
we increased.
Exactly, yeah.
Right.
So 6%, that's not bad. That's better than inflation. And, given their strong growth rates, a solid earnings momentum, I would expect them to have at least 41 consecutive years of dividend increases too. So be on the lookout for that. In terms of valuation, they trade about 17 times forward earnings. So I think that's pretty reasonable given all the positive metrics here and the solid growth potential. So this too could be a solid total return pick in 2014.
All right, own either of these?
I do not.
All right, check out other stock picks on our website, Zacks.com, if you're not there watching this video. And if you are there, browse around for some other interesting information, stock picking strategies, other interesting videos that are on the website, all able to be linked to from the homepage, Zacks.com. With Todd, I'm Terry Ruffalo.